Well, joining us now is Ozan Özkıral, founder and managing partner at Tanto Capital Partners. Ozan, always good to talk to you. It looks like we're back to tariff roulette, I would say. You just don't know where it's going to land. And now Trump administration is getting reprieve on the ability to impose tariffs. Does this all net? Obviously, we know that it creates more uncertainty in the trading environment, but does it just mean that volatility maybe is underpriced?
Good morning, Jumana. Happy Friday. Yes, of course it is. As we discussed in the previous programs, the name of the game is trying to price volatility in the markets. It's just that volatility that we need to price is no longer what it used to be. We need to increasingly, so it seems, try to price the involvement of the judicial branch in the U.S. in trying to understand how volatility will take shape. Obviously, tariffs will continue to be a core part of the new negotiations and the world order that we are living in. And the markets are finding it quite difficult to price all of this complexity. So we are in for a rough ride, and I think we will continue to be in for a rough ride for a while to come.
I was looking at a chart at the top of the show showing that there's been a full recovery of stock markets, at least U.S. stock markets, since Liberation Day. Not the case for the USD. Do you expect that structural underperformance of the dollar to continue in the absence of policy certainty?
Look, I think having an element of hedging against overexposure to U.S. assets is normal. Ultimately, investors, we're all trying to balance our portfolios and hedge it as best as possible. I do think, however, that in the medium to long term, this will rebalance again, as U.S. is one of the only countries in the world where innovation takes place in size, will continue to take place in size. And so within the DM space, within the Western Hemisphere in particular, I do believe that US dollar will end up rebounding at some stage. Looking at the global macro, we are witnessing a significant challenge, I think, to the feasibility of long-term debt as an asset class. I think that's an element, and that's something that we should talk more about, as there is a number of different factors that investors just cannot price in to try to, go along the long end of the debt curve.
Yeah. So let's talk about that then. We just put up a chart of the U.S. yield curve, 30-year yields down to 4.9%. And by the way, it's not just long-term U.S. yields that have been drifting upwards. A lot of people have been talking about that JGB auction, the Japanese bond auction that didn't go well a couple of weeks ago, followed up by another long-end auction. So there just really doesn't seem to be a lot of demand now for this long-duration paper. Why is that the case, Ozan?
Look, I think it's just very difficult to price in political risk. Governments come, governments go. They all have a different perspective towards spending. I do believe that most governments have become reckless in terms of their approach towards borrowing. And, does this mean that countries in developed markets will default? No, it doesn't. But do we really want to finance these governments in the long end of the curve? I think it's a very difficult ask. And the Japanese auction was an interesting one. They went out with a trillion yen target. They came out with 750 billion yen or so. They set the highest yield for the past 25 years almost. And there is a significant repricing that needs to be done. Now, how can you price risk at such a long-dated part of the curve when we are witnessing ultimately a fundamental change in the way that we trade, the way that we invest, and now potentially the way that we govern? And funny enough, this may end up being the convergence that we've been talking about between DM and EM. It's just not the way that we thought it would be. If developed markets find it more difficult to access the longer end of the curve, or it gets repriced, we do face a different scenario. So I don't think long-term debt will become as attractive an asset class as it has been in the past.
Where are you investing right now, Ozan? Where are the opportunities? Are you finding cheap options anywhere in this, what is likely to be quite volatile environment?
Look, I think, investing these days, in my humble opinion, has to be long-term, trying to see through the short-term volatility. And I try to look at asset classes that will be there in the future, innovation-driven, AI-driven, potentially quantum computing-driven. And in terms of geographical diversification, I am a fan of the U.S. markets. Again, mainly because capital follows innovation. Innovation takes place in markets that give you scale and some level of predictability.
Yeah.
And kind of, I take a view in a more longer duration than just kind of looking at the short-term markets. The one thing I will say, Jumana, though, I think something that is worth noting is that because there is so much complexity that we all have to digest, we do, in the markets, generally end up missing certain, I think, factors of risk. Now, we're talking about that, I think the Trump legislation around the tax bill that has this 899 clause that may end up taxing foreign investors or investing in U.S. assets. These kind of things are not conducive to pricing risk in the short term. So I try to take a look at it in the longer term horizon, again, focusing mainly on innovation and where innovation is likely to take place.
Yeah. So down but not out then for U.S. exceptionalism. Ozan Özkıral, founder and managing partner at Tanto Capital Partners, thank you for joining us on the show. Well, coming